we got the job numbers, and unfortunately, too many people have jobs. Unfortunately, there are not enough unemployed people, and that's what's bringing the markets down. So we were hovering at about $20,000 on Bitcoin, and then the jobs numbers came out. 263,000 people got jobs instead of the forecast, which was 255,000 people got jobs. So as a result, the market now believes that Powell's going to be more aggressive on rate hikes, and so the markets are down. Bitcoin is down at 19,621. NASDAQ is getting murdered, minus 2.4% or down 275 points. So there's lots to talk about today. We're going to talk about that. We're going to talk about the Binance hack. We're going to be talking about whether anything that the Fed's doing is actually working for the markets. And what if what the Fed is doing doesn't work? Then what happens to markets? Where do we go from here? So it's going to be an amazing show. Let's do it. It's Friday. Let's get out of
Good evening, everyone. Good evening. Good evening. Good evening, everyone. Good evening.
Good evening, everyone. Good evening, good morning, good afternoon, good night. I don't know where you are, but welcome. It's Friday. We're here to banter. We've just had the job numbers come out. Too many people have jobs, and that's apparently not a good thing for the markets. Well, that's what we're going to be talking about today. It's Friday today. Remember, Fridays are our banter days. Today, we got one of the biggest banters we've ever had. I'm so super excited for this banter. You're not going to get as much alpha per minute on any show on the internet ever. That much I can promise you guys. But before we start the show, let's welcome all the new people to our channel. So just welcome to our channel. Subscribe to our channel if you're not already subscribed. Just so you know, we were on 91% of people watching the show were subscribed to the channel. We slipped. We're now on like 87%, which means that 87% of the people are subscribed, and there's 13% of the people that are watching the show right now that are absolute losers. So don't be a loser. Hit the subscribe button, join the channel. Also, remember that our Friday banters are brought to you by the only VPN that crypto people should use, and that, of course, is NordVPN. So remember, guys, a VPN is really part of the basics that you need if you're in crypto, because what a VPN does is it hides your IP address, and it basically reroutes your web traffic. And what that means is that you're actually surfing absolutely anonymously. And if you don't do that, then you're not surfing anonymously, and you do risk getting hacked. You risk letting exchanges and crypto apps know what your location is. That's not a really good thing. And then also just a little secret for our American users. You didn't hear it on Banter. You heard it somewhere completely different. But I'm just going to reiterate what you heard. If you want to trade on an exchange, right, and let's just say hypothetically that the exchange doesn't allow US residents, I've heard a rumor that some people use a VPN. I'm not sure if it's true, and I'm certainly not recommending that anyone does that, because that would be absolutely illegal. But I have heard rumors that some people use VPNs. And if you want to use a VPN, you go to the referral link below, you click on NordVPN, you use this code, and guess how much you pay to secure your crypto? You pay $2.98 per month. Now, if you're not spending $2.98 a month to secure your crypto, then what are you even doing here? That's what we need to be asking yourselves. All right, so that's the formalities out of the way. It's Friday, big Friday. We've got some great guests. We've got Raoul Pal, Mark Yusko. We've got Joey Krug. Welcome, guys.
Hey, good to see you, Ran.
So nice to have you here. I'm just trying to calculate the IQ of this panel. So got about 160 with Joey, and then probably about 160 with Mark, 40 with me, and then Raoul. I'm not sure. What's your IQ, bro?
I don't know. We'll go for 10. I'm
going to cede all my points to the gentleman from Puerto Rico.
Yeah,
right,
Joey wins this game.
I get to start with the reveal, and I got to do the jump. So I got the Bitcoin orange pants on. Look, I have the Bitcoin bull socks on today. So Bitcoin bull market, and it's because of the shirt. keep calm, we'll print more. So we'll talk about all those things.
We'll talk about that. I see you wearing the Do Kwon collection pants, the orange pants they give you in prison, right? That's part of the Do Kwon collection.
I guess I didn't think about it that way, but it's my Friday specials every Friday, Bitcoin Friday.
Okay, yeah. So I'll also have a pair of orange pants, and in the office we call them the Do Kwon collection because that's the Do Kwon. The Do Kwon's going to prison. All right, guys, there's lots to talk about today. I think the first thing we need to talk about is the jobs numbers. We'll spend 2 minutes on the actual jobs numbers. The market was expecting 255,000 jobs. There were 263,000 jobs, which means that unemployment's not slowing down at all. I mean, we thought that unemployment was slowing down. It's not slowing down.
It's a total lie.
Hold on. Let's just quickly look at inflation. You have inflation. Inflation is supposedly slightly slowing down, but when you look slightly deeper into inflation, what you'll realize is that the reason that it looks like inflation is going down is because the part of inflation that's decreasing is the oil price or the energy section of inflation. That's the part that's decreasing. And the only reason why that's decreasing is because Joe Biden is selling the strategic oil reserves that the United States has and putting more oil into the market. So if I were to sum this up, I would say that nothing that the Fed is doing is actually working, or nothing that the Fed has done up until now is actually working on bringing down inflation or slowing down unemployment, so increasing unemployment. How do you guys feel about that? Mark, I can see you got a lot to say about this.
No, look, I totally agree. How many interest rate hikes are going to fix the zero COVID policy and the supply chain disruptions in China? How many interest rate hikes are going to fix the price of wheat in Ukraine? How many interest rate hikes are going to change the price of Russian gas to Europe? It has nothing to do with anything. The real problem is the jobs numbers, total nonsense. It's the birth-death ratio. It's a nonsense number. And it's because they took 300,000 people out of the labor force in the last month because they turned 65. Because when you turn 65, you're out of the labor force. That's nonsense. Have you been to Walmart? Like half the people that work there are over 65. It's nonsense. And it's all about a narrative. And then you got the inflation stuff. Look, the problem is Joe Biden is committed to sub $3 gasoline by the election because there's a perfect inverse correlation between presidential popularity and gas prices. So he's releasing the SPR. The problem is the Saudis have said, to you, buddy, because they just had to deal with Russia and they just cut production by 2 million barrels. By 2%. So now oil prices are back to 90. So I said in January that by the election, oil will be $60. I got to change my mind. I think Saudi is basically telling him to stick it.
Raoul, what do you think?
I think economic data is generally lagging. Also, it's one data point a month, right? We're used to markets that give us multiple data points every second kind of thing. So one data point a month is pretty noisy. You don't look at what last hours was in Bitcoin versus this hour and think, oh my God, this is the change of trends. You realize that it's noisy. So the forward-looking stuff suggests that the economic picture is getting bad quickly, and usually unemployment follows. And we've seen it with the ADP and stuff like that. It's more frequent in data terms. So I think it comes down. I think what we're doing is we're in the final death throes of this. Oh my God, the Fed keep needing to go and go and go. Meanwhile, if I look at 2-year rates, they're at 4.3%. I think the one issue is something Mark touched on is the oil price does need to go down and stay down because it is important. As Ran, you said, it's a big part of this. It's not all of the inflation picture. Housing, everything else is slowing down anyway, but oil does need to go down and stay down, and there's a fight going on. I think the fight will get won by demand. I think they will end up crushing demand because European demand, if it doesn't get crushed via interest rate rises, it's going to get crushed by brownouts. I mean, in South Africa, Ran, what they do is they cut power. If you don't have enough.
We now where we live, we have about 8 hours a day now? 6. We're between 6 and 8 hours a day of no power. So literally the power shuts down. Now, most people don't actually understand what that means. They think your lights just switch off. It's not about your light switching off. It's about the traffic light switching off. It means you all of a sudden have a lot of traffic, which means you can't really commit to getting to a meeting on time because you never know where you're going to be when the lights switch off. But we've become used to it. And so what we've done is most houses have generators or inverters or UPS supplies. We're in an office. We've become used to it in South Africa, but Europe is not used to it yet. So Europe doesn't have every home with a generator and every office with an inverter or something underneath. But for us, it's a reality, and we live with 14 hours or 16 hours of power every single day. We're just used to it. And
but when you force German industry to not use power and households to use less power, it will affect the oil markets over time. So, I think demand gets destroyed purposefully. And what they'll do is, to Mark's T-shirt, the flip side of that is you have to pay people for that, because what they don't want to do is hurt the voters. So they'll hurt industry, but they'll give voters checks, which is stimulus.
So South Africa, I'll give you guys a great example. South Africa is a very, very, very resource and commodity rich country. We're big exporters of gold, we're big exporters of coal, we're big exporters of a lot of platinum, etc. But we didn't actually capitalize on the commodity cycle now because we never had electricity, so we couldn't mine. So the mines were in practical shutdown. We couldn't refine the stuff because you had no electricity. So imagine if you're running a gold mine, but they say, look guys, you're running a gold mine, but you only have 14 hours or 16 hours of electricity every single day. You physically just can't get the stuff out the ground. And so South Africa didn't capitalize on the huge commodity cycle. And that's what's going to happen to Europe. Europe's just going to become uncompetitive because it becomes so expensive. Joey, I want to go over to you. I know you guys look at the macro picture. You guys have got pretty profound views on the macro picture. How are you guys looking at this relative to how you set out? I mean, a while back I think you said the pain was going to be slightly less than this, if I'm not mistaken.
Yeah, so I think like the main things that kind of I'm looking at right now are, one being kind of like shipping prices. I think it's a good kind of like leading indicator of inflation. And you tend to see it, go way up, 6 months or so before the inflation numbers go up. If you look historically, and the same thing before they go down. There's some positive data there. It's still quite elevated. So if you look at shipping prices, late 2020, you're talking to ship a container ship from China to the US, you're talking $1,500. At some point in 2021, it peaked at like 11,000. It's kind of been steadily declining recently, but it's still at about $3,700. So still, over 2x what it was before the inflation really spiked off. And then the other thing is, there is actually a pretty good index. Some people at the New York Fed created this supply chain pressure index. And so you can basically see like how many standard deviations is the supply chain like out of whack versus normal. It's still about 1 standard deviation above normal, which is actually a lot. Like there's some supply chain issues in July 2008, which like at the time was considered bad. And it's still, the same level as back then even. And then I guess the last thing that I look at, which was, starting to see some positive data, and then if you look more recently, kind of looks more concerning again, is the Cleveland Fed has these like inflation nowcasts, which are usually pretty accurate. They only go 1 to 2 months out, but they're usually pretty spot on. And, September numbers that they're forecasting kind of look the same. But if you look at what they're projecting in October, obviously only, a week's worth of data to go off of, but they're projecting a CPI number of about 0.7, core inflation. They're projecting about 0.5%. And that's month over month. It's not an annualized number. That's projecting that much in 1 month alone. And so that's like somewhat concerning because you're getting to kind of pretty high inflation numbers like we were seeing back in the summer. And I would have probably expected that you might see more of like September and October kind of repeating. I don't have much additional color there just because we only have 7 days of data or so, but that's something that I'm paying attention to and looks, fairly concerning.
Yeah. The other thing is the break-even inflation rates have shot up again. They got low. The 2-year break-even got well below 2%, and then it just rocketed higher in the last couple of days. So, there's something in this inflation picture that's still unsettling, whether it's the oil market or something else, I don't know, or it's the ongoing China situation, Europe situation.
Yeah, y'all, it's not inflation.
No, it's supply.
It's currency devaluation. The house I'm sitting in Chapel Hill, North Carolina, according to Zillow, went up 40% in the last 12 months. It's bullshit. My house didn't grow. It didn't get more efficient, right? I actually had to put money into it to keep it from depreciating. So that's currency devaluation. Everybody's like, oh, this is the 70s. This is nothing like the 70s. Nothing like the 70s. The 70s was demographically a period of lots of young people, 25 to 45-year-old people, 25 to 45-year-old people, perfectly nice people, a lot of them on this call, okay? Not productive members of society, because they're being trained to be productive from 45 to 65. And so you borrow from your customers in the form of higher prices. That's what inflation is. Look around the world, any place where there's lots of young people, you have high inflation. When you have lots of old people, you have deflation. Japan, Europe, United States. Every single day, 10,000 people turn 65 in this country. Same thing in Europe. And that doesn't change for a decade. Working age population growth is going to zero with certainty, right? There's nothing you can do to fix it. You can't fix it. You could try to fix it with immigration, but we're going the wrong way on that, right? If it were up to me, I would send planes, literally empty planes, to China and India, and I'd get all the PhDs and I'd bring them back and I'd give them free land in the middle of the United States and say, just build something. And that could solve a little bit of it, but we're not doing that. We're going the opposite way. It's like, stay away. So this idea that somehow we're going to have this massive spike of inflation, it's temporal, right? It's oil prices. Oil prices were manipulated down by the Saudis right after the lockdowns. They sent ships over to the ship channel in Houston. They filled up all the storage, all of it, like 100% of it. And so the West Texas producers literally had no place to put their oil, which is why oil prices went negative in April of 2020. And so then they stabilized back around $40. Then they went to 120. Okay. That's what we're seeing in the CPI. But that's this. It's the printing of money. And that's why everybody's like, oh, well, Bitcoin's not a good inflation hedge. Are you joking? In a 9-month period following the lockdowns, the Fed printed half of all the dollars that have ever existed in the history of our republic. 246 years, one half were printed in 9 months. So what should have happened to the price of Bitcoin? It should have doubled. Because remember, one Bitcoin's one Bitcoin, but we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars or euros or yen or renminbi or whatever. And so it went from 10,000 back then to 20,000 today. That's exactly what it should have done. But yeah, it's noisy in between because price got stupid in November of 2021 because a bunch of people took out leverage. I throw my brother under the bus all the time because they stole my Bitcoin. What are you talking about? It's like, well, I went to BitMax. Like, stop. You levered an 80 vol asset, and the price went down, and you didn't make the margin call, and they seized your collateral. You're a fucking idiot. Okay.
I was talking before the show about how I took a 10x leverage position. If he's an idiot, can you imagine what I am?
He had higher than 10x. You don't lever 80 vol assets.
Kyle, you don't lever 80 vol assets, bro.
I've been telling you this for a long time.
But okay, guys. But I mean, if I look at what's going on here, the Fed is increasing interest rates. It's been unprecedented. We've had 375 basis points rate hikes in a row, which is, I think, unprecedented territory. And if it's not unprecedented, the last time this happened was in the 70s.
1930.
It's not having an impact. It's not having an impact. And the reason why it's not having an impact is because this is not demand related. This is supply related. At what point does the Fed put their arms up and say, look, if we carry on doing this, we're going to create a very, very, very strong dollar. And if we create a very, very, very strong dollar, all those concerns that the United Nations had and voiced in the last week and other countries with high US dollar denominated debt have been voicing actually become a much bigger concern than the inflation concerns that we have. At what point is the Fed forced to stop as a result of that?
The Fed likes a strong dollar because it imports deflation. So you're buying goods at cheaper prices. So right now they're motivated for it. Other nations are not so impressed by it, but it's kind of okay, just about. For emerging markets, it's a real problem because there's not enough dollars around. There's a shortage of dollars. So it's a game of musical chairs. And Sri Lanka was the first one to fall on the floor as somebody ripped the chair away. And one by one, countries are falling by the wayside. So I think the thing is what's really interesting is people generally say the stock market needs to break. And I look at this and think, actually, the bond market's broken. It's decoupled from break-even inflation rates. It's decoupled from growth projections. It's decoupled from the business cycle in an unprecedented manner. So we've broken the government bond market, which is much more important. The equity market will do what it does, whether it goes to new lows and has another spike low or whatever. It's the bond market we should pay attention to. And what was the answer in the UK? Mark's T-shirt was the answer in the UK, is they bought gilts. And I think Europe is next. I know Arthur Hayes just wrote a piece on this, and I wrote a piece on this, is Europe will be next because if Italian spreads blow out, they'll be forced by their new mechanism to buy Italian bonds. So we're starting to see the bond market becoming the main focus here. And if you break the bond market, it stops all financing of everything. And that's why the Fed will stop. They've broken the big one, which is that. The dollar, yes, it could go further. And if it gets really unruly, then that'll be another issue and Fed swap lines will come out. The ECB drew a small amount of Fed swap lines last month, but they will all come begging to the US for dollars, and that will be the change of the liquidity cycle.
That's the dollar chart. That's the Dixie chart. I think we've all been very familiar with it. It's been parabolic. You can see the yellow line just shows the parabola of the Dixie. We peaked at about 115. Let's call it 115 on the dollar on the Dixie. I mean, is it not scary if this dollar index continues to go up and gets up to 120? I mean, Raoul, I think you said that there was zero resistance between here and 120 or 110 and 120. Is it a scary scenario if the dollar gets up to 120, or is that something that
markets look at rate of change? The rate of change of the dollar is high, but not the highest ever yet. But it's getting there. If you were to have the next spike to a 120, it's getting up there with the highest rate of change in the history of the dollar. If it goes through that, okay, then we're all fucked.
Joey, what do you think? Strong dollar, good and bad?
Yeah, I mean, the only view I have, it's just kind of from a technical standpoint, when the dollar tends to go way up, at least over the last year or two, you tend to see crypto prices react in a downward direction. And so, yeah, if the dollar got to like 125, for sure, at least from my seat, that would not be favorable for the price of ETH or Bitcoin. I don't have too much of a view on the direction of the dollar, though. Raoul and Mark probably have better insights on that specifically.
I don't think it's happening. You have to go back a long way to find dumber policy decisions than what the Fed is doing right now. Okay, there's only twice in 200 years where have been worse policy decisions. The worst ever was 180 years ago in 1840, and we had no Fed. Right, we're in the free banking era. There was no national bank, and we had a garden variety recession, and banks were all freaking out because they had all issued their own money. Right, Texas issued their own money. Companies issued their own money. Literally had all kinds of script running around the United States. And long story short, they raised rates and caused the depression, right? First depression since the country started in 1700s. And 90 years later, you had the second worst policy decision in history, two-part. One, the dumbest people in Congress, which is kind of like an oxymoron, but okay, Smoot and Hawley, dumbest people ever in the history of American Congress, decided to pass legislation to put up tariffs into the crash, right? Deglobalization. Globalization is good. Adam Smith was right 450 odd years ago. Okay. Deglobalization is bad. Populism is bad. Nationalism is bad. All isms other than capitalism are bad. Isms are not good. Ferris Bueller was right. And so that was the first problem. Then the second problem was the Fed back then, which had just been created, the creature from Jekyll Island in 1913, raised rates and turned a garden variety recession into the Great Depression. The worst year in the stock market was not 1929, it was 1931. We are on pace to have the worst year in history now, other than 1931, and probably exceed 1931. The 60-40, to Raoul's point, is the worst in all of market history. 140 years, never been a worse 60-40. So everything's, in fact, I put out a tweet Friday, said breaking, everything.
Hold on. I think I have that tweet. I think I kept that tweet.
And then literally on Sunday, what do? The UK says, keep calm, we'll print more. And they saved the pension system in Britain. The pension system in Britain was bankrupt. Let that word sink in for a second.
What caused
leverage?
Leverage.
Fucking idiots.
It's always leverage.
Look, leverage can never make a bad investment good. Never.
Okay.
It can, and often does, make a good investment bad. Buying long bonds is not a bad thing. Buying long bonds on leverage into a rising rate scenario is suicide. But the investment bankers, here, we'll give you these derivatives for free. Anything that's free is very costly because they're taking 4% off the top and they're giving it to you at precisely the wrong time. Because guess what? It's easier to sell stuff to people when it's hot, right? It's not easy to sell straw hats in the winter, right? So you got to sell them in the summer. And so when everything's going great, they want to sell you leverage because they're like, oh, interest rates are low. I got this LDI, liability-driven investing. I need to match my assets and liabilities. So I'll lever up. Look, they sold a bill of goods by Ray Dalio and risk parity. One of the dumbest long-term. Look, short-term it works. In a falling rate environment, it's awesome. Lever up, great. And Ray Dalio is a multi-billionaire, and I'm not. So I'm not criticizing him. But actually, I am. But the idea of risk parity in a pension fund and using leverage, they should not shoot. Anyway.
Look, I'm going to be back in a sec because I've got a 10x leverage position on Bitcoin. I need to close it.
But it is. I mean, Mark, a big thing about this is the pension system is the issue here. This is what people don't realize. We talk about these baby boomers. It's the pension system that's the issue. It's in the US as well. 60-40 obliterates pension returns. So CalPERS, CalSTRAs, everybody's underwater again. So what you've got is future liabilities exploding. And the only way of dealing with that is printing more money.
No, so, buy Bitcoin. No. The only way to fix it, literally, is to put Bitcoin in the pensions.
We'll talk about that in a sec. I see that Tom Crown is in the comments here, and he wants to join the show. Somebody get him a StreamYard link. Get him onto the show. All right, let's quickly just talk about how long this can last and when would be a good time to start deploying capital. And I think I want to start this with Joey and say, at this point, would you be deploying capital onto the open market? And when I say onto the open market, I'm not talking about the venture capital deals where you guys are getting VC deal flow, which is absolutely incredible, and you're getting amazing terms because you are who you are, and you're probably the best investors in the space. But would you be looking at deals on the open market?
Definitely. So I think, one interesting thing about our current fund structure is we have the ability to deploy in early stage deals as well as, public markets. And while I do think a lot of the early stage stuff, especially in, seed and series A, has come down in price, the public markets, I think, are actually even usually more favorable right now. That's something that's not going to stay true forever, but at these current levels, I mean, if you just kind of like level set for a moment, ETH is trading very similar to the 2017, 2018 peak, but it has, infinitely more, like it's 1,000x plus more actual usage, things built on top, that sort of thing. So I think if you look at kind of what's happening in the crypto space today, it's slight years more advanced than it was 5 years ago. Obviously, the macro environment is different, but I don't think it's so bad that like it warrants the same prices that we had 5 years ago. It's there's a lot of stuff we're picking up in the open markets that I just feel is very attractive, both kind of in absolute terms, but also relative to what we're seeing in the private markets.
So what kind of stuff are you looking at in the open markets?
Yeah, so the framework I would use is like, first you have to beat some base asset. You could denominate yourself in Bitcoin or ETH, and that's kind of like your like all else equal. I'll own a pile of that. And then once you have that, for us it's mostly ETH, and then you can start looking at stuff on top. I still think a lot of the stuff built on top of ETH hasn't actually quite bottomed yet versus ETH. If you want just like a kind of like napkin cloth way to measure this, you can look at DPI, the DeFi Pulse Index versus ETH. It's kind of been in a pretty consistent downtrend the last 18 months. There are pockets of DeFi that I think are interesting. You look at projects like GMX that are doing, perpetual futures, that sort of thing. There's kind of areas. It's hard for us to buy a lot of stuff like that just because the market caps are small. But if I was a smaller investor, I would probably deploy into areas like that. Versus right now, we're kind of mostly just, I would say, in a sort of holding pattern, waiting for the kind of the larger DeFi stuff to bottom versus ETH.
I mean, when you say those are too small for you, just give the viewers some kind of context on the amount of money that you guys are managing at the moment. And just by the way, Tom Crown, we have sent you a DM on Twitter. Okay, so he's gonna join the show. Get him on, man. If he's in the comments, get him on. Yeah. So Joey, just give us some context for the numbers of how much money you guys are managing, more or less, and kind of like the check sizes that you write when you do get something on.
Sure. Yeah. So at Pantera, we're managing kind of low 4 billion range at these prices, and when it comes to check sizes, I'll speak about public market positions. I would say if we're buying something in the public markets, like we want to be able to buy at least 15 million. I would say to get a meaningful position on for something that we think is like very high upside, but a small amount of the portfolio. I guess GMX is probably changing recently because they just got the Binance listing, but before that, man, it was tough to buy that asset in any, even at 10 million, you'd be hard to put a position on.
I mean, I've got some really small shit coins that maybe with 15 million we could do magic there, Joey. You and I. So I'll get hold of you after this. Raoul, Mark, are you guys buying on the open market yet? Are you guys? Do you guys think valuations?
I think last time I came to the show, I thought June was the low in ETH, and I still think that's the case. The thing I'm looking at is much like Joey is. I'm looking at like the Solana ETH cross. Solana's down 85% from the highs. Right, it's got a lot of network activity, second only to ETH, really, and it bottomed. It bottomed in June. It retested in September in that cross. I kind of like all of this. I think the conditions are fully in place for both the macro to be turning over time, and for these for the whole space to start doing well. And you'll see the risk-seeking behavior from something like Sol ETH. It's not a high-risk bet, so we're not talking about small tokens here. We're talking about, one of the next biggest ecosystems. If that starts outperforming, it tells us we've got some ability to take risk in the space. So I'm pretty comfortable here. So I'm thinking, if you've got capital, not many people have got any capital left, but if you've got capital to add, you can go behind the sofa and find some money. Just keep averaging in, because this kind of level of oversoldness, this kind of peak macro fear is what you want to be looking for.
Yeah, 100%. So a couple things to echo. One, June 13th was the bottom. That was the end of crypto winter. Actually, I think I called it on your show when we were on.
Yeah, you did indeed.
And June 13th was the end of crypto winter. Now we're in crypto spring. Crypto spring is not crypto summer. Crypto spring is like spring. Right? It's cold some days, it's warm some days, it's windy, it's muddy, it's kind of yucky. So we're going to have volatility. So we're not going to have a straight parabola. That starts next summer, which to me is sometime in Q1 next year, leading up to the next halving in the cycle. So that's the first part. The second part is Joey mentioned the word base. That's my thing, right? Bitcoin, Avalanche, Solana, Ethereum. Everyone should have a base, okay? And you should own the Bitcoin. Here's the thing, Bitcoin. I was on Maria Bartiromo's show a month ago, and she said, "Shouldn't we be buying tech stocks down here?" After, like, are you kidding me? Look, tech stocks despite being down 30+%. Some of them down more, like 80, 90, Shopify. People are, Shopify's cheap. Are you joking? Right? It could go down 90% from here and still be expensive. Okay. They don't make any money. They don't make money. So, and the growth story is gone. But my point was stocks are in the 93rd percentile expensive. They've only been more expensive than they are today, 7% in all of history. Bitcoin has only been cheaper 3% of its history. So in 14 years, Bitcoin's only been cheaper relative to its long-term trend 3% of the time. So you got to own that. In terms of ETH, I don't like the change. And everyone's like, the merge is great. I'm like, I don't get it. You had proof of work, which made you different. Now you're proof of stake like all these others, and you're not as fast and you're not as, so I don't know. I think you made yourself a target. Maybe it'll work out, maybe it won't, but I think Solana and look, we're owners.
I could take you on. I could take you on right now on the proof of work versus proof of stake discussion. I could do it, but I'm going to leave it to Joey because I want to hear his view.
Sure.
Yeah,
So,
I think like if you look at the ETH merge thing, it's to me it's less about like the merits of switching to proof of stake versus proof of work, which is sort of almost like an intellectual debate. Like it kind of matters and there's certain things, but I think for Bitcoin it matters just given like the history of Bitcoin and its monetary policy and all that sort of thing. I think for ETH though, if you envision it less as like a monetary base and more as just trying to build like this like smart contract platform computing layer, you have to make optimization choices that focus around scalability. And the part about the merge that's important isn't even really what happened a few weeks ago in my mind. It's kind of the next hard fork post merge, which enables a ton of stuff for layer 2 scaling. So if you look at stuff like Arbitrum, or Optimism, today they do pretty high throughput, but nothing close to something like Solana. If you look at kind of what the next hard fork after the merge will enable, is it enables basically a more efficient way to do those things, such that you actually get pretty close to Solana scalability numbers, but on ETH with all the kind of security guarantees and uptime benefits that you have from ETH itself. So that's kind of where I see the benefits, less on like POW versus PO stake, but more just like opening up scalability.
Yeah, I think I think that's Joey's exactly right as always. But my point is just that look, if you are being attacked, right? So there's all the ETH killers out there, and they all come at it saying, "Oh, we're faster, or we're stronger, or we're better." Okay, maybe. I mean, the problem with Solana, look, we made lots of money in Solana. We own a lot of Solana. Still trying to sell it. But here's the thing: it's right 99-ish% of the time. If I'm doing accounting, can't use it. If I'm doing gaming or an NFT or a little glitch in the corner, I don't care. Fine, we can use it. So for NFT platform, interesting.
I mean,
the other stuff that's being built on top, and the other place where there's huge value, Uniswap. Right? Uniswap will do 2-ish, maybe 3 billion of revenue this year, and it's trading at 6. The only thing that I'm struggling with is I said again publicly, like most things, that in fact, one funny story. So I'm heading to Vegas for the Web3 conference next week, and I don't go to Vegas very often, but my wife came with me a couple years ago, and she's only seen me speak one time. Got to the end of my talk, and she said, "Mark, you can't say things like that." I'm like, what did I say? She says, "No, you say things so forcefully." I'm like, well, what's wrong with that? She says, "Well, people will believe you." I'm like, well, that's the whole idea. She says, "Well, what if you're wrong?" I'm like, I'm wrong all the time. I just changed my mind. So the key is that, Uniswap has this massive, amount of revenue relative to its market cap. The dog coins, I said the bear market will be over when Doge is worth 0, which is what it should be.
Doge is not going to be worth 0 for as long as Elon has to buy Twitter. I mean, if you read those court transcripts, what you'll see is that he was pretty serious about integrating Doge into Twitter. I mean, that pretty much
That's
came
been
out.
my base case forever, is he's going to use it for streaming car payments. He's going to use it for interspatial payments between satellites and servers, and he'll use it for Twitter. I'm sure of it.
All right.
Yeah, I mean, look, I'm not a big Doge fan in terms of technology because I don't think there's much technology to be a fan of. But I mean, if people use it, you ain't going to stop people from using it. We've seen more.
They're going to have to hire a developer or something. I mean, there's just. Look, Raoul has a point. You know, I have a friend who just bought Getter. You know, the alt-right kind of social media thing. He wants to use it. No, not Getter, Parler. And he wants to use it in Parler. I'm like, no, because then it would actually have a use. So I think don't be so quick to write off Doge. I mean, if you want to write off something, write off XRP. I mean, that one you can write off. But I mean, don't be that quick to write off Doge. I want to just talk a little bit about Q3 earnings, which are now going to be reported coming out. Before you get to Doge, Joey, would you buy Doge?
No, I mean, it's an interesting thing to trade around sometimes. In our quant strat, we actually used to trade Doge because it was back in the last market because it was super liquid. Yeah, it's not something that I would buy on a fundamentals basis.
He also said that they buy $15 million at a time. Can you imagine what would happen to Doge if Joey did decide to write the check? That would be like an Elon pump. I want to talk about Q3 earnings. So one of the things that is quite scary is if the earnings are in Q3 start to reflect the slower economy and we start missing earnings forecasts or earnings. If we start missing the earnings forecasts, how do you think that we're starting to see earnings coming out? Well, we're starting to see probably the third week of October is the one that we should all have our eyes on because that's pretty much where the tech earnings are going to start coming out. You got Meta, you got Google, all reporting on this week. How do you think this earnings report is going to look? How do you think this
disaster? Complete
Raoul, let me start with Raoul because I know Raoul's got a hard stop in about 5 or 6 minutes. So yeah, just let me start with you. How do you see this? By the way, Raoul, the last time you came on the show, you were with Yurin, and the one bastion of hope we all held on to was the fact that earnings remain stagnant. And we said, you know what, if earnings remain good and PEs go down, cool, we factored that in. But if earnings go down too, then we got a big problem.
So look, earnings follow the business cycle. The business cycle is going lower. Question is what is priced in? There's a lot of people who do it from bottoms up, which what Urian's talking about is, okay, where are all the earning estimates? Do they need to come down? When I look at the year-on-year rate of change of the S&P 500 versus the ISM survey, it's already pricing the ISM at 42. So that's a deep recession already. Could it go a bit further? Yes. So the question is
what the ISM is for those of you.
Institute Supply Manager Survey. It's basically like a monthly version of GDP. But when it gets below 47, it prices a recession. It's currently at about 50, which tells you growth is slowing down now. Once it crosses 47, it means we go to recession. And it's pricing in a reasonably deep recession. But the other thing is, I just wrote about this in Global Macro Investor. I went through almost every single investment survey that I could possibly find, from the Bank of America surveys for institutional investors through to the AAII surveys, institutional investment surveys, the whole lot. This is the most bearish everybody's been ever in the history of equity markets since all of these surveys began, essentially. So Mark's right. They're definitely going to come down. But the question is the impact as big as everybody fears, or is it already in the price? If everybody's record bearish, you know, when you see Kotu and the massive tech hedge funds, 70% cash, you kind of know how bearish people are because their job is to be invested in technology. So that's my caveat with that, is it kind of sets itself up potentially for a false break lower.
I have a question about that. I've always been taught that markets bottom when people run out of cash, and that markets can never bottom when everybody is sitting in the highest levels of cash. So what you've just said is right. Hedge fund managers are in the highest levels of cash that they've ever been in. Crypto funds, if you look at the number of crypto funds that raised and how much cash is sitting on the sideline, I mean, just Joey has got a bundle of cash sitting on the sideline. How can these markets bottom? How can these markets bottom if people are sitting there with so much cash?
No, the biggest fear is actually not that. The path of pain is not down because everyone's prepared for it. Everyone's got the insurance. What the path of pain is if they don't go down. That's when they're all fucked. If technology went up in a straight line from here, Koto are going to be forced to buy as the markets rise. I think the path of pain, looking at a 12-month, 6-month time horizon, the path of pain is high. And it's with cryptos the same. The crypto hedge funds are very gun shy still. Everybody's gun shy. And so if it goes high, there's a lot of institutions we've talked about many times on this show on the sidelines. Joey knows that too. I mean, everybody is interested. They've done the work. The moment the price goes up, everyone's short the upside. They're like being short calls. Everybody is. So I'm super fascinated by the skew.
That was Monday, Tuesday, right? All it took was an emergency Fed meeting. They didn't even say anything. There was no release. It was just the rumor that maybe the pivot's coming, and you had a face melter, 6% rally. But remember, you will never see an up 4% day in a bull market. Not ever. There's never been one. You only have up 4% days in bear markets, because a bear market is a market that goes down most days and goes up sharply on good news or perceived good news. A bull market is one that goes up most days and goes down sharply on bad news or perceived bad news. So that's where we are in crypto. Okay, we're in the beginnings of a bull market. It goes up most days, but goes down sharply on bad news or perceived bad news. And the equity markets are still in a bear market. And so, but Raoul's exactly right. Look, AMD last night did miss badly, like super bad. And they told us that Microsoft's going to miss badly. Anyone who's dependent on PCs is going to get crushed this quarter. So it's going to be ugly. But the point is, we have this phenomenon. I call it the high jump, falsification. You take the bar off the rack, you put it on the ground, you jump over the bar, claim you're the high jump champion. So a year ago, company A in the check says, I'm going to make $1 this quarter. Then 6 months ago, I'm going to make 50 cents. Then last week, I'm only going to make 10 cents. And they report 11. And everybody's like, yay, it's a beat. Are you fucking kidding me? No, that's not a beat. Okay, that is a miss by 89 cents. But the expectations issue, everyone's bearish, everybody's in cash. The pain trade is definitely a face melter if the Fed changes direction.
Raoul, I know that you've got a hard stop, so I'm going to thank you so much for coming. Good to see you, my friend. I know that you mentioned that you've got a hard stop now, so
yeah,
thank you so much.
I've got later on the day, I've got an AMA. I think it's on YouTube, Twitter, RealVision, everything. So anybody who wants to join that, you get more of my thoughts from that. But anyway, take care, everyone. Have a great weekend.
What we'll do is we'll leave a link to that AMA in the description, so you guys can hop onto Raoul's AMA later. So as soon as it's ready, just text us the link, and we'll put it in the description of the show.
I only have one question, Raoul.
Yes, my friend.
How are you not aging? Do you have the picture in the closet? How are you not aging, my friend?
Yeah. And I see. Okay, so Raoul, thanks so much, my friend. Good to see you.
See you all. Take care. Have a good one.
And we got Tom Crown, who actually was just in the comments, and we decided to add him. Welcome, brother. How are you?
Doing good, man. Started from the bottom. Now I'm here, and somehow I'm on the show. It's great to see you guys. Ran, thanks for having me.
In the glasses. Joey, are you concerned about Q3 earnings, or you just think that it's already all priced in?
I'd say it's probably not all priced in. I mean, to Mark's point, you pull up the AMD stock chart, which I was just pulling up in the background, and it's down 9-10% on the news of their earnings. And so, and they're a massive semiconductor company, right? Like clearly wasn't all priced in. And even in eras where like you have like pretty good like earnings forecasts on sites like Estimize and stuff, like a slight surprise, stocks will often move 5, 10, 15, 20%. So I would say it's probably not priced in, but I'm not sure it'll have that much of an effect on crypto per se. Like I think it's kind of, it's kind of this idiosyncratic thing. I think crypto is going to trade more in line with just like overall rate expectations, inflation expectations, that sort of stuff, until there's kind of more clarity there, and we see basically like pretty steady declines in inflation. Like once you see a few months steady declines, then I think crypto will start to trade much more independently. and it's already starting to trade a little independently, right? Like, today, if you look at the equities market, last I looked, equities is down, significantly more than crypto was. So we're already starting to see the correlations break a little bit.
Yeah, I see that Bitcoin's starting to be much more correlated towards gold. Do you think that that is the next narrative for Bitcoin? So to become a hedge against emerging market currencies, and maybe even not so emerging market currencies, the pound, even the Japanese yen, I see is back at intervention levels. Do you think that we may be moving into the next narrative of Bitcoin? We had Bitcoin being an inflation hedge. We had Bitcoin being a peer-to-peer money. That failed. We had Bitcoin being an inflation hedge, which worked in the days when there were inflation. Now we've got, you want to call it negative inflation. They're trying to bring inflation down, which effectively is, you can call it negative inflation. Do you think that the next narrative for Bitcoin, the next run for Bitcoin may actually be protect yourself against crazy currency devaluation? Joey, what do you think?
Yeah, I mean, I think so, right? Like if you look at Bitcoin, it performed really well when there was a lot of currency printing. There's a lot of money printing. And then now that that's kind of stopped, it hasn't been performing as well. But it's starting to tick up again. You kind of saw the stuff happen in the UK. I think there's going to be more things like that due to what's happening with all the kind of Russian gas cutoffs and stuff due to the Ukrainian war. And so I think, like, as that starts to pick back up again, it probably is pretty positive for the price action of Bitcoin. So, like, I think you have like two factors, right? You have like increased money printing in certain parts of the world, particularly in Europe, and then you have, hopefully over the next 6 to 9 months, the kind of inflation situation levels out as supply chains open up. The Fed cuts start, Fed hikes start having more effect throughout the economy, and so you have one kind of factor that's sort of like neutral to slightly positive, and then one that's very positive historically for Bitcoin price action, which is increased money printing.
Yeah,
Tom, what do you think, bro? Let's get. We've got Tom with us. Tom, what do you think, bro?
Yeah, I'm ready. I've heard the narrative shift so many times in crypto. Well, Bitcoin. It was kind of tinfoil hat in the beginning, and then the store of value, currency. We've seen the definition of it shift around so much. I do think that we are starting to see it act more like gold. I'm not going to kind of like pin my thoughts to it. I'm not going to get comfortable in that narrative because I've seen it switch up so many times. The correlations seem to be very fleeting. I do think we're heading into an environment where Bitcoin does have the potential to show extreme resilience. And we've seen that possibly already. Look at June's lows on stocks or indices, and Bitcoin still hasn't broken 17.5. It's still hanging out. I'm holding on to hope there at least until 17.5 if it breaks. It's showing relative strength. So I'm into it. I'm like not so bullish on this quarter. I think this quarter's numbers are going to make Q3's numbers pale in comparison. I just wonder what the retail numbers are going to be. Black Friday, I think, is going to be a complete disaster. And 2023 is really setting up in a way that makes me uncomfortable. But it's a spicy time to be in markets for sure.
What about the midterm elections happening in about a month? So there's about a month to the midterm elections. I don't know. I mean, just intuitively, Joe Biden going into midterm elections with markets at multi-year lows, or
it's
I guess
weird, right?
Lows since he came into power. That doesn't really make much sense to me. I mean, he can pardon the people who were in possession or smoked marijuana. That will win him some votes. But I don't think that that's going to win him as many votes or as many votes as he may lose on markets which are at lows, so to speak.
Yeah,
Mark, what do you think?
It's baffling. No, sorry, I didn't mean to interrupt.
Can we get some kind of rally into the midterms, Mark?
Not unless oil prices go down. Look, and that was the plan. I mean, Biden's had a plan to try to save the election, and he's basically being thwarted by the Fed and by Saudi. And so, the Fed, he had no control over the Fed, right? They're independent. And he can try to jawbone the Fed to, do less. But the Fed, for whatever reason, is intent on breaking stuff. And as we talked earlier, the Fed, I believe, is causing the pain, and they're committing one of the worst policy errors in the history of financial markets, right? And you have to go back, 180 years to find one worse. So I think that's real. And the Saudi thing yesterday is big. Like, we were on our way to $60 oil. We were on our way to sub $3 gasoline. And there, again, pull up the chart. There's an inverse correlation between presidential popularity and gas prices. When gas prices are high, people hate the president. Not necessarily his fault, or I guess it could be her, but not necessarily their fault, but they hate him. And so when gas prices go down, people 6,500 people get released from prison. That's not enough votes to save the Democrats. They've tried buying people's student loans, and then they found out that might be illegal, so they're not going to get as many votes for that. Gavin Newsom's trying to buy votes by giving people $1,000 checks. Okay, fine. By the way, that's what dictators do. Dictators buy votes by giving away free stuff. Argentinian free electricity, Venezuelan free stuff. I mean, bad people buy votes with free stuff. So we are a banana republic, and that's why. Look, you say Bitcoin and gold. Bitcoin is digital gold, right? There's only been one money in the history of the world, gold. Everything else is currency. It's debt. It's credit. It's not money. Money is an asset that exists in the absence of a liability. There's only one thing in the entire world for 5,000 years, and that's gold. Bitcoin is better than gold. It's more portable and it's more divisible. Therefore, it, I believe, for the next 5,000 years, will be the primary store of value. Now, that's a great use case. And that means it could be a, 5, 8, $10 trillion asset, relatively short order. That's fantastic. But then money, right, doesn't have to be currency. Money doesn't have to be fiat that can be devalued by governments at a whim. There have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. Let that sink in. 3/4 no longer exist. The pound sterling is the oldest currency in the world, 380 some odd years. It used to get you 1 pound of sterling silver, hence the name. Now it would take you 174 pounds of sterling silver. And when they were the world reserve currency, back when the sun never set on the British Empire, before they invaded Mesopotamia in 1913, coincidentally, when the Fed was created, it was worth $5 per pound. Today it's sub 1 because they lost world reserve currency status. They incurred a bunch of debt. The pound sterling collapsed. The dollar ascended. We became the superpower. Now the dollar, despite the fact that Dixie is making new highs, the dollar's not going up. What do you mean, Mark? Dixie's going up. No. The yen and the euro are going down more, right? That's what's happening with the Dixie. Crazy Kuroda-san has obliterated the yen. Obliterated. Like 35% this year. The euro obliterated. The pound obliterated. It is a race to the bottom, and we are the I'm about to say anything, tallest whatever. And the renminbi is going to be the beneficiary. It will ascend from a reserve currency to the reserve currency. Bitcoin ultimately probably becomes the reserve currency, becomes a reserve currency first, then the reserve currency. But this is all a long-term plan.
All right, so we are running out of time. I do have some very, very quick rapid fire questions because they're coming from the audience, and I mean they are our community. We've got to respect our community. There's a question here for you, Joey, and the question is: would you be buying XRP ever, and especially now with the heightened chance that they may beat the SEC?
Yeah, I don't think so. Like we tend to be buying more like of the kind of public smart contract platforms, and then kind of a lot of the DeFi stuff. To Raoul's point earlier, Solana ETH, that's a pair that we do trade around a bit. Same thing with ETH Bitcoin, and then stuff like XRP. It's kind of just a different narrative, and
so
I think
not
I'm
for
more.
You. Not for
yeah, it's
you
not
guys.
for us. I'm more excited about the smart contract stuff.
Tom, would you touch XRP? Come on, people say that Ripple is going to beat the SEC. Surely that's a buy signal on XRP.
I mean, I have a little bit, from 2017, like probably everyone does from back then, tiny little bag. I'm not planning on adding win or lose. It's not what I'm here for.
Mark, I know you're not buying XRP, right?
No, look, I'm open. I was on a show with a bunch of XRP army because I like to hear the other side, and they were trying to convince me. And I don't see it. I mean, my biggest problem is it's too concentrated ownership wise with the foundation that can be manipulated.
You don't have to be. You don't have to justify it. I think we know the answer. All right, Joey, best layer one other than Ethereum. If you were to put your money on the best layer one, most promising layer one other than Ethereum, where do you put your money today?
Yeah, good question. I think from like a tech standpoint, Neuner is very good. From a traction standpoint, Solana has a lot of stuff built on it, especially on like the gaming.
What's better, tech or traction?
I think traction, right? Like from like a price action traction standpoint, traction is what drives prices more.
Even if tech is trading at 1/8 of the market cap of traction, Neuner is trading at about 1/8 of the market cap. I think 1/8 of the market cap of Solana. Do you still think that Solana is a better bet, or would you put your money on Neuner?
Well, we have our money on both. The great part of being an investor is you can buy both. And I would say, short term right now, I do think Solana is probably pretty close. Probably already did have a low first ETH. We put on a position a few weeks ago, some large kind of the point that Raoul was talking about. But long term, like we own both of them.
All right, Tom, best layer one other than Ethereum.
Bitcoin.
Other than Bitcoin and Ethereum.
Oh man, I don't even know then. Cardano. Just going by market cap. Sorry if that's too taboo.
Okay, Mark, what do you think? Best layer one other than Ethereum?
It's hard for me to argue against Joey on this because he's forgotten more about tech than I'll ever know. But I probably lean toward Avalanche. I think it's superior in many ways to Solana. But look, the Nobel Prize 4 years ago went to Romer, and he said it's not the best technology that wins; it's the one that gets critical mass first. So traction, as Joey said, wins. So it's hard to see why Solana is not an unbelievable buy here.
All right,
but I think some of the DeFi stuff is even more interesting than that.
One more question. This one specifically to Joey. Polkadot. So that we see a lot of developer activity on Polkadot when you look at the specific statistics. We also see a lot of VC funds holding Polkadot. What do you think of Polkadot? What do you think of the case for Polkadot?
Yeah, so I think you see a lot of funds holding it, mostly because it's kind of an asset that's been around a long time. Like if you look at when Polkadot did their crowd sale back in 2017, that was kind of the advent of new layer ones, and they're like the only credible team that you could invest in back then. And so I think like that's a large reason why so many funds own it. If you again kind of look at the traction side though, I would say it's been fairly tough to build on. Like if you look at where people are building these kind of like new kind of like custom app chains, a lot of the traction there has gone to the Cosmos ecosystem recently, and not really as much the Polkadot one. I think Polkadot, they need to basically just like work on the UX for developers, make it easier to use, and then it becomes more compelling. But right now it's kind of losing versus Cosmos, I'd say, in that regard.
Alrighty, that's us for Friday Banter. Joey, thank you so much. Welcome to our Friday Banter fam. Mark, thank you so much. Tom, great to have you on, even though it was just for a short period of time, but great to have you on. It was a complete surprising in the comments. So love you guys, part of the Banter fam. Thank you so much. We'll see you guys again soon, I guess. And for the Banter fam, just hold on a second. Let's just say cheers to our guests. Much love. Thanks, Mark. Thanks, Joey. Thanks, Tom. Remember, guys, just a few things before we go. First of all, this show was brought to you by NordVPN. You got to have a VPN if you're in crypto, and if you are going to get a VPN, well, then rather get the best VPN that supports crypto all along, and that's NordVPN. As I said, there's a referral link in the stream below. You can see the referral link over here. Don't go yet, because I promised you guys that I'm going to not 10x, but fund some accounts. So here is the referral link. Just click there. Support NordVPN. We need them because they bring us these amazing Friday banters. We could never do it without them. You could never get this much alpha on one show. I mean, you had Raoul Pal, you had Joey Krug, you had Mark Yusko. I think between them, they must manage $10 billion, $8 billion, $5 billion. Huge. I mean, these are the biggest managers, and that's all thanks to NordVPN. So do that. Secure your crypto for only $3 a month. Use this banter link. You get that. Next up, don't forget our trading competition. So we got the trading competitions. They're starting in like 9 days. If you want to join, just go to the link below. And Tom, I expect you and your community to be here trading with us in our trading competition. Here's how it works. You can either sign up on Bybit, or you can sign up on BitGet, or you can sign up on Bybit and BitGet. Okay, so you can have 2 chances to win. If you're in the US, you can sign up on BitGet. You have to sign up using our referral link, which is here below. Once you've signed up with the referral link, you'll click that. You'll sign up with the referral link, and then you will go to the competition page and sign up. I think there's about 400 people already signed up. Remember that you can win over $100,000, over $100,000 up for grabs. The winners get $12,000, $14,000, and then we work all the way down. I also said to you guys that I would choose some people in the Discord later today. So if you haven't been in our Discord, go to our Discord. There is a link over here to the Discord. Click on the link there. Join the Discord. Tell us that you've signed up for the competitions. Join 22,614 other people. Tell us that you signed up, and I'm going to be there later on in the show, dropping $250 to people funding their trading accounts for the trading competition if you guys want to participate. I want to make this the biggest trading competition out there. I want to make it the most fun trading competition out there. But mainly the idea behind this trading competition is to learn how to trade. And so Sheldon, Kyle, Bombay Trillionaire, we're going to be here with you, and we're going to be exploring different trading strategies all along and having fun in a bear market. So, guys, love you guys madly. I love Friday Banters. You're never going to get more alpha per minute shows than our Friday Banters. You're also going to you're never, ever going to get bigger guests than our Friday Banters. That I'll tell you. See you guys again on Monday or on the weekend if anything happens. Until then, have fun. Trade well, my friends. Much love, much love, much love.
Good evening, everyone. Good evening. Good evening. Good evening, everyone. Good evening. Good evening. Good evening.